Welcome to this week's look at the state of the New York City real estate market. We're going to take a look at Manhattan and Brooklyn. We're also going to take a look at the luxury market, meaning properties that are priced at $4 million and above. I'm Julianne Bond, and I'm a residential real estate broker in New York City, where for over 20 years I have helped buyers and sellers successfully navigate the often turbulent waters of New York City real estate. Each week, I bring you the latest news on the New York City market. I do it to keep you informed, whether you are actively in the market, thinking about entering the market, or maybe you're just curious about what goes on here. We all know that knowledge is power, and I like to empower people because I know if they have the information they need to be successful, they're going to make great decisions. Of course, there's always a lot more that goes into being a successful buyer or seller than just having data points, but having that information gets you off to a great start. So let's talk about what happened in the Manhattan real estate market last week, the last week of July of 2021. What we're seeing is a continuation of the supply not quite keeping up with the demand. If you look at the new supply for this week, from last week, it's 307. That's down about 2.3%. The pending contracts, meaning the things that went into contract last week, was also down about 2%, but was still pretty decent at 277. We do continue to be in a kind of lower supply, higher demand scenario, which is great if you're a seller. So sellers, I know I keep saying this, but it does bear repeating. If you have your property on the market and you are not getting offers and you are not getting sold, you're probably priced at a point that is just a little beyond what the market would support. So you might not need a huge adjustment, but you definitely should be making an adjustment. I also just want to briefly mention an analysis about renting versus buying, and the short of it, just the really short soundbite on this is co-ops are definitely the better place to see a better return if you're looking at this kind of rent versus buy scenario. Over time, it's the one bedroom co-op in Manhattan. Same holds true, and we'll get into that also. I'll mention it for Brooklyn as well, but let's just say we're not seeing that same kind of performance with the smaller units, the studios, or the 2 or 3 bedroom units. So just so you know, if you're thinking about renting versus buying, or you're thinking about investing, I'm happy to talk with you about that, but I just wanted to kind of share that with you, that I do have some data points on that, and I would be happy to talk with you about that specifically and share that with you. So now let's talk about what happened in Brooklyn last week, meaning last week of July. Not so dissimilar from what happened in Manhattan across the board. We are continuing to see the supply kind of decline and go a little sideways. The pending properties, the contracts that got signed last week is exceeding the supply. So let's take a look at those numbers. So the supply for last week was 185 units that came on the market. The contracts signed exceeded that, 192 contracts. So what that means is we're continuing to see the supply not quite keeping up with the demand. It's a little frustrating for the buyers. That could change as we get into the fall, but for the near future, we would fully expect to see this trend continue. That is to say, though, that also that this is still a really good market, and we are definitely seeing the absorption of the inventory and real appetite for on the part of the buyers. So buyers, hang in there. There may be more choices for you sellers. Same advice as I'm giving Manhattan sellers. If you're not selling and you have your place on the market and you're just sitting on the market, really consider making a price adjustment. it is, there's no question, this is not the market, this is your price. You are a little too ambitiously priced for this market. As I mentioned, with regard to the people who are thinking about the renting versus buying, again, it's the one bedroom co-ops that are performing right now. So let's call it the sort of obvious play in terms of investment are the one bedroom co-ops. That doesn't mean that you couldn't buy a studio or even a larger apartment, a 2 or 3 bedroom. It just we're just not seeing the same kind of performance with those properties that we're seeing with the one bedroom co-ops, not condos, co-ops. The other factor to consider, no matter what, when you're buying is the kind of the long-term projection, right? If you're going to have it for 10 years, I mean, we can't really say where the market will be then, but there is something to be considered about having that money working for you and preserved for you, not just being handed over to somebody else and never seeing it again. So let's talk about what happened in the luxury market in Manhattan, meaning properties priced at $4 million and above for last week, the last week of July. We had 21 contracts signed. That is 18 contracts fewer than the week before. Condos outsold co-ops 15-2, and there were 4 townhouses in the mix. I've shared a chart with you that shows how it breaks down by neighborhood, how the average asking price, the average square footage price, lots of details that if you're interested, you have available to you. Let's talk about the number 1 contract that was signed last week. It was Penthouse 10A at 90 Morton Street, asking $18 million. The condo is over 3,600 square feet. It includes 3 bedrooms, 3.5 baths, 610 square foot landscape terrace off of the living room, kitchen, and one of the bedrooms. 90 Morton is a former printing plant that was converted into a condo in the fall of 2017. And lots of amenities: concierge, covered driveway, fitness center, 64-foot pool, children's playroom, residence lounge, rooftop terrace with an outdoor kitchen. In this case, the buyer was from New York. The number 2 contract was 10D at 212 West 18th Street, asking $14.9 million. This is in a building called the Walker Tower. This apartment has almost 3,200 square feet, 3 bedrooms, 3.5 bathrooms, a spectacular over 1,000 square foot terrace. It's very dramatic, 14-foot ceilings, a 27-foot master suite. What's interesting here is that the seller paid $16.9 million in January of 2017, so they are clearly taking a bit of a loss here. This building also has some nice amenities: a concierge, 24-hour doorman, lounge, playroom, gym, sauna, and a roof deck. I'll share the links with you if you want to check out these properties in a little more detail. And of course, let me know if you have any questions about them. I'm happy to talk about those. Just some quick stats. The total weekly asking price sales volume was over 165 million. The average asking price was almost 7.8 million. Again, sharing these charts with you so that you can have even more details if you want them. So, looks like contract activity has fallen a bit on the luxury properties, at least from the week before. Not totally surprising because this is summer and getting really into the end of the summer, which almost always means a slowdown in activity. Let's see what happens in the fall. But, well, for that matter, let's see what happens next week. So thanks for joining me for this week's look at the state of the New York City real estate market. I do this every week, so feel free to subscribe and you'll get my weekly updates. check out my social media accounts because I'm always posting about New York City real estate there. Let me know if you have any questions. You can post them in the comments below. I'm happy to answer any real estate questions that you have. I'll be back next week with another State of the Market report. In the meantime, take care.